Happiness is not accounted for in generally accepted accounting principles. Neither is peace of mind, propensity for burnout, or the quality of your life.
You're listening to the Profit First for Lawyers podcast, the official companion show to the book Profit First for Lawyers by RJon Robbins. Now, this podcast is for you if you want to bring home more profit while working fewer hours in the office, spending even more time with your loved ones, and turning your office into a lean, mean, profit-breathing machine. So if you're tired of working for your law firm instead of your law firm working for you, stay tuned for some really practical insights that will get you the results you've always wanted. It's time to put your BS aside for the next few minutes and put yourself, your family, your firm, and your profit first. Welcome back to another episode of the Profit First for Lawyers podcast. I'm your host, Carly, and today, we are so lucky to be sitting down in studio and about to be taught from the amazing Evelyn Aucoin. Evelyn, welcome to the show.
Thank you so much for having me.
For our listeners, for our audience, you might recognize the sound of Evelyn's voice if you have taken our Profit Leak Assessment course, which is, of course, completely free. Free plug, I guess. I'll put the link in our show notes. But Evelyn is well known as the go-to person for really smart, really informative, useful, and entertaining financial advice. Evelyn, do you want to give a little bit about yourself, your background, just so that everybody kind of knows your overall credentials and why you love numbers so much?
Yeah, absolutely. So I've been in the finance and accounting world for 35 years at this point. I know it doesn't seem possible looking at me. It could be that long, but I've been doing this a long time. And one of the things that I'm really passionate about is working with people who've been told that they're quote unquote not good at math. I am so sick of this byline running through everybody's subconscious. Spoiler alert, I never used calculus again after I left college, right? But you know what people do need? They need money math. They need to understand it in a way that to either do their jobs, run their businesses, evaluate their personal life, whatever. So I am incredibly passionate about breaking down anything finance and accounting related in a way that is very accessible. It makes sense. And people can get it out of their head that because they sucked at algebra or calculus, that it dooms them to a life of not being able to use a number, which quite frankly is complete bullshit.
Thank you for that. Well, and I know that's, this is one of the topics, and we combat this a lot on a show called Profit First for Lawyers, right? That a lot of law firm owners just they feel very uncomfortable looking at their numbers. I know that you obviously have been with how to manage a small law firm for a really long time. You've been an expert in your field for a completely normal amount of time, but for a large portion of your life. What makes you so passionate about numbers and about helping people to understand the story behind theirs?
Interestingly enough, when I started college, I was actually pre-law. And by the way, in business school, it's a business school pre-law course. And I'm in the room with, I don't even know, it was a very large university, several hundred students, freshman year, business school. And they asked you to raise your hand based on your major. Well, most of the hands went up for accounting. And I thought, wow, the world doesn't need more accountants than that. Let's be clear, right? And then, as part of my business degree, I had to take a requisite number of accounting courses. And so I took my first accounting course. I was the only person who got the final project right, which was a consolidation of numbers. I was the only person out of like 300 people in that level of accounting across all the classes that got a perfect score, got it right, and also elected to do the project on their own and not as a group. So I was like, okay, I'm weirdly good at this, so maybe I should pay attention, right? And I don't care for a lot of I've done some technical accounting, but my passion is in the numbers. It's in finance. It's in dashboards. It's predictive analytics. I read numbers like some people read novels when numbers have context. And that's what I'm good at it. And I'm naturally good at it. But because I'm naturally good at it, I also recognize that some other people may not be naturally good at it. But we've got to bridge that gap for people to be successful. The reality is we all have to deal with numbers and money and wealth concepts somehow through our lives. So we've got to be able to bridge that gap to a level that people can know it sufficiently. They don't have to be experts. I'll be the expert. The lawyers I work with always go, "Oh my God, Evelyn, I can never do numbers like you do numbers." I said, "Great. And I'm not going to practice law. So when I screw shit up that I need a lawyer, I'm going to hire you. And when you screw shit up and you need somebody who knows numbers, I will do it for you." That's the way the world should work.
Now, I know that you are a big fan, a big proponent of Profit First for Lawyers, of course, the book by RJon Robbins. There are so many things that I want to ask you. There's so much good that we're going to do for our audience today. I really say we as the royal we. I'm not going to do it. You're going to do it. I'm just going to ask you to tell me all your secrets, Evelyn. But first, I know you brought a clip from the studio. Do you want to go ahead and give us a little teaser, introduce that for us?
I really love this piece in the book because RJon kind of shoots down this concept that, accounting in and of itself and the box that accounting is, which is a valuable box when you're doing your tax return, it's not necessarily the most valuable box or perspective to look from, perspective to take when you're evaluating what is going on with your business as a small law firm owner. And so he really reframes how you as an entrepreneur should be quantifying what success looks like for you and using your own lens when you look at your law firm and no one else's. And that's really what this entire chapter in Profit First for Lawyers is helping the reader do, is reframe this perspective.
What a beautiful way to say that. Oh, Evelyn, I loved that so much. Okay, let's roll the clip.
No, my friends, happiness is not accounted for in generally accepted accounting principles. Neither is peace of mind, propensity for burnout, or the quality of your life. Remember, your law firm is supposed to work for you. It is supposed to serve you personally, professionally, and financially, not just financially. You may have a very hard time ever understanding just why and how differently your CPA and your banker see your law firm versus the relationship that you have with your law firm until you understand this important point. Your business is supposed to work for you.
What about this clip really speaks to your soul?
It really, really speaks to me about you creating your own definition of what success looks like. I think people really need to think about what success looks like for them personally, financially, professionally, defining what success looks like with your business if you're an entrepreneur. I think that it always starts with your own definition, followed by your clear intention, because you can't have one without the other. And that's the thing that I think Profit First for Lawyers spells out so well. It helps you create a really specific definition, right? I'm now semi-retired. My definition of a successful life right now is not having to set an alarm clock at least 3 days a week. Now, I'm always up by 6:30 generally anyway, but just not having the shock to my system when I have been ruled by an alarm clock in my professional life, working mom for 20 plus years. I mean, we were on a schedule. It was like being in, I like the military, right? We had schedules and I had to set alarms and everything had to be done. So my definition of success right now in semi-retirement is having numerous days a week. I can wake up when I want to wake up. So that might not be anybody else's definition. How one of our entrepreneurial lawyers defines the success of their law firm is very individual. I have one of our lawyers that I've worked with a couple of different times. She has 4 children under the age of 10. Her definition of what successful for her law firm looks like is very different from another lawyer who may be the exact same age, but is still a single individual. The priorities are different. And by the way, your priorities should also shift over time. So once you've even defined what success looks like, it may evolve. But this whole concept of creating your own definition of success, I think creating your own definition of what wealthy means for you. I think there are a couple areas in your life where the textbook definition is cute, but until you really figure out what it means for you, it doesn't have legs.
When it doesn't connect to your purpose either. If you're borrowing somebody else's definition and that definition is, make $1 million in profit per year, but that's not actually what it costs to live the life that you want to live, it's an arbitrary definition. It doesn't attach to your purpose.
And the trap a lot of people fall into is just adopting whatever definition somebody else projected on them. How many people in their early 20s are still living their life the way they think their parents want them to live it or whatever, right? God bless my family, but I'm from the South and they thought they had veto power over every decision of my life clear after I was out of college. And I was like, no, mon frere, that is not the way this is going to go down, right? Yes, I am the oldest daughter, granddaughter, blah, 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 like all the memes, right? I mean, how many people are living what they think is the definition of success or whatever that somebody else projects on them, right? I mean, how many people really don't really stop and think about what it is they want, how they want it, how they define success, how they want to work, how they want to live, where they want to live. Something like 25 years ago, still 65% of people lived within 20 miles of where they were born. And today that statistic is down I think into the 30s, right? So there's something about not just accepting the default settings on your life that's incredibly powerful. And Profit First for Lawyers runs right along with it. Don't just accept the default of what profit means under generally accepted accounting principles. Start taking control and defining what that looks like for you and what level you expect it to be out of your entrepreneurial business, law firms, what we're talking about today, and start, accepting it. We have a lot of healthy ranges that we tell some of these law firms they should be having in terms of their total owner benefit. And it's a shock to the system for some of these guys because they just don't even realize that this is what the healthy range can be, should be, right? And that's why a lot of people come to How to Manage is because it is a shock to their system when they hear what we say, what financially healthy looks like.
You obviously have helped probably untold numbers of law firm owners at this point kind of walk them through their what do they want in life so that way they can read their numbers and let it tell a story and help to promote their goals and their dreams and all that good stuff. Can you walk me through, and for our listeners, so say our listener is a law firm owner who is scared of their numbers, that is stuck on the default setting of success. What's kind of the first thing that you do when you speak to somebody to help get them solid goals and dreams that matter to them such that they are willing to learn how to look at their numbers?
At this point with my time at How to Manage, I've done 3,200 advising calls with small law firms. Not 3,200 firms, but 3,200 advising calls, probably over about 200, 300 law firms in total, plus dozens more I've taught in workshops. I think one of the most important things that I start with people is really helping them understand the actual black and white, what the numbers are telling us about where they are today. Because many of them think their total owner benefit is one number, but when I sit down and actually pull financials and look at it, it can be dramatically different, higher or lower. A lot of them aren't even really tuned in into how much in fringe benefits they're taking through their law firm. They confuse distributions with profit if they're in an S Corp. You're in an S Corp. Everything that comes through as profit is going to come to you on a K-1 and you have to pay taxes on it, whether you take it out of the firm or not.
we've used the term total owner benefits. We did do a really great episode on this. We'll link it in the show notes below. But just for anybody who maybe this is their first episode or they didn't catch that one, will you give a quick overview of what total owner benefits are?
Yes. So when we're talking about total owner benefits, we are talking about if it's an S Corp and they have a W-2 salary, how much is apportioned to a W-2 salary, which they should set with a tax advisor to optimize it for tax purposes. Fringe benefits that because they have the benefit of owning a business, that things they can put through the business as legitimate business expenses, their cell phone, maybe a car lease, health insurance. Okay. Perks, fringe benefits. I use the two terms interchangeably. And then whether it's an LLP or an S Corp, there is a net profit that is generated by the business. That net profit is taxable income to the individual, whether or not they take the cash out of the business. Many of them confuse the fact that they don't take the cash out of the business, that they don't have a taxable event. That is not the way it works. But it distorts with them sometimes what their total owner benefit is. Because let's say their firm made a $500,000 profit, but they only took $100,000. They think that $100,000 was part of their income as the owner, but really they're going to be taxed on the whole $500,000. Okay. So really, they confuse distributions with net income. And so a lot of times we have to do some education around that point. And then ultimately, there may be instances. I had one member, we call our clients members that are a part of How to Manage. I had one member who they sent to me because they were really, really upset and panicked that their net income was such a small percentage of revenue. Let's say it was 5%. And they asked me to come look at what was going on in the law firm. Well, they had a W-2 salary. They had quite a bit in fringe benefits and perks. Matter of fact, the fringe benefits and perks alone were 13 percentage points of revenue. And then their W-2 was around 9 points. Well, 9 plus 13 is 22. 22 plus 5 is what, Carly?
27.
27%. We call anybody over 25. We consider over 25% to be doing pretty good. We'd like to aim for 30, maybe 30, a third, maybe 33%. We like to aim around that. But above 25%, you're not, blowing the hot dog stand. Like things are going pretty well. So this person's total owner benefit, looking at all the pieces, was actually okay. But what they had done is minimize their exposure for income tax purposes, legally, logistically, ethically. But they lost sight of how much they were doing strategically for tax purposes. They had lost sight about that it was 13 points of revenue. So this is where they just got in a disconnect. And again, they weren't being dumb. They were just sitting there going, this doesn't feel right. Something seems off. And it takes me with a magic decoder ring, the money math decoder ring, to come in and pull it apart and go, no, things are okay. You still want all these perks, all these fringe benefits. Oh, absolutely. For example, they were contributing to a retirement account. I mean, legitimate, like good stuff going on, but they really had just lost sight until we kind of zoomed out and looked at the big picture rather than just being in the details of what was going on with a profit and loss statement. So that's a perfect example.
This is driving home to me how important it is to, number one, have a tax strategist. But number two, RJon talks in the book, he gives a great example about this, about, going to a bar function and hearing some, big spenders say that they're, getting 10% in profits. And you really don't know unless you can look at somebody's math, is what it sounds like, right? You really don't know what that is. So before you go taking advice from somebody who seems to be so much more profitable than you are, you really have to sit down and look at your own numbers, because 10% of what? Is that truly the total? Is yours truly 5%? Because, maybe from a IRS standpoint, that's true, but from an actual total owner benefit of the benefit you derive from being the owner of the business, you might be taking home a lot more in profit than the person who's bragging about having such a profitable law firm.
Also going to just say this, like how many people are bragging about something? And let me tell you, if they're small law firms, 25% of them may not even have a bookkeeper and know what the hell their P&L is based on what I've seen, right?
Oof.
We often will have people who will join How to Manage who prior to being at How to Manage, they just ran their firm out of their checkbook all year long. And then they take the big pile of receipts and all their bank statements to the tax guy, the next spring. And then it's so the surprise party when we do Schedule C on what our revenue was and what our net profit was. And guys, I'm not shaming you. I'm just telling you that is the reality of a lot of small businesses, not just law firms, is they really don't worry about these things until it's tax time. And so this is not abnormal. Okay. But it's not optimal by a long shot. And so one of the first things we do when people start working with us at How to Manage is figure out if they have a bookkeeper. Are they getting monthly financial statements? We consider there's 7 critical financial reports every law firm should be looking at monthly in order to do a correct, ethical view of what's going on with the financial controls and performance of the business. And so one of the first things we do as we work with people is to get these 7 reports in place. Our controllership program, I always call it the CFO with training wheels. They are there to help them get their shit together, get a bookkeeper hired, get your 7 reports in place. Yes, How to Manage offers bookkeeping, but we have a waiting list often. There are other good bookkeepers you can potentially work with. It doesn't have to be us, but we have standards. I literally just updated the 25-page guideline to give our members on how to vet, hire, and work with a bookkeeper. It's that important. It's critical.
Yeah, you have such a beautiful way of breaking things down, Evelyn. I wonder, what is your definition of why it is so important to have these 7 reports? And would you mind just going through, I know we probably don't have time to like break down the 7 reports in great detail, but can you give me like the subject line and the like kind of one line, what does this report do for you?
Yeah, the Reader's Digest version, right?
Yeah.
Reader's Digest condensed books. I don't think they exist anymore. All our parents had Reader Digest condensed books, right, growing up. So basically the 7 key reports come down to looking at your balance sheet. I personally like a trend balance sheet. That is where you're going to have each month's balance sheet side by side for 6 to 12 months. Numbers need context. If I just look at this month's balance sheet and it says my credit card is $22,000 this month, that tells me less than if I know it was $32,000 last month or $10,000 last month. So numbers need context. So a trend balance sheet is my favorite balance sheet to use. We also use a trend profit and loss, same concept. Your months of your profit and loss side by side for 12 months so that you can glance across it left or right and look at what's the trend in revenue. What's the trend in your labor? What marketing? Is our investment in marketing growing? Is it flat? Has it decreased? What's been the trend in our profitability? So we look at those 2 critical financial reports in a trend format. We also think every law firm needs a cash flow forecast. Now, if you're a law firm that has a lot of liquidity, you leave a lot of your cash in the business, or you have a large line of credit, you may only look at your cash flow projection month over month. Most small law firms benefit from doing it week over week. And it's basically a forward-looking checkbook. We take your operating account and we do an EWAC, an estimated wild-ass guess of what money in and money out is going to be for the next 6 to 8 weeks. If you have accounts receivable, for example, contingency firms don't have accounts receivable. But if a law firm has accounts receivable, we want you looking at your accounts receivable aging, seeing what is going on with your AR. Law firms should have close to 100% collection rate. They should really have minimal AR. So that's one of the key levers we pull with law firms when they join How to Manage, is understanding how to minimize any exposure to accounts receivable whatsoever. And then you have work in progress, which this is basically sold but undelivered work. Again, this can look a little bit different depending on your billing model, hourly, flat fee, or contingency. So we customize this a little bit based on your billing model. And then we have your 3-way trust reconciliation. About 80% of the law firms who join our bookkeeping didn't really have a fully three-way trust reconciliation under their prior bookkeeping arrangement. So this is one of the most important ones that we look at with all of our law firms, not just the ones that join our bookkeeping. But we really do a very, very deep dive on what's going on with their three-way trust reconciliation. Again, if they're a law firm that doesn't use a trust account, this doesn't apply. But for most law firms, it does apply. And then the seventh one is your budget variance report. Hey, Carly, what do you have to have in order to have a budget variance report?
A budget?
There you go. A budget isn't one of the seven, but the budget variance report is. So it helps us imply how important it is to have a budget. And if you're a small law firm, if you're just starting out, it can be very, very simple. Okay. 10 or 12 lines. It doesn't have to be the Magna Carta of all budgets, but you do need a budget. You need to have, and by the way, people always say, well, I had somebody literally in a board meeting at a large nonprofit where I sit on the board. I talked about putting something in the budget, and this person with a finance background said, well, Evelyn, it would have to be an estimate. I said, newsflash, budgets are estimates, every damn number. Okay. So my point is, you just kind of exercise your EWAG, your estimated wild ass guess muscle, and put together your budget.
Thank you so much for breaking down those 7 reports. I think it really showcases how important it is to have financial professionals in your corner that are not only giving you a P&L every month and maybe telling you how much AR you have, but really breaking it down so you have a roadmap. You said that the first thing you do when you get, a new law firm, that you're doing a diagnostic, is help them to understand where they are now. And that makes sense to me, right? Because if you don't know where you are, then you can't get to where you're going. I can't tell you make a right-hand turn, because if I don't know where you are, I have no clue where you are in relation to the goal, right? So that makes a ton of total sense. How do you help somebody who has been numbers averse to gain confidence and maybe even, I don't know, maybe excitement's the wrong word, but I don't know what word to use instead, when looking at these 7 financial reports that they're now getting every month?
We are going to start literally with what you've got. If out of the 7, all right, you have right now is your P&L, your balance sheet, and maybe if some sort of a trust rec, it's not up to snuff. I'm not going to shoot you in between the eyes the first time we meet. I'm going to figure out again where we are. And then we're just going to, and then like, for example, if you're a contingency firm, the work in progress report is one of the most important reports for a contingency firm, because in a contingency firm, we call that your pipeline. And just briefly, we would take all your open cases. We would put in estimates of how much you're going to advance in fees if you advance fees on your cases. We're going to put in an approximate settlement value you think you're going to win for your client, what that means is legal fees to you. And then the part everyone hates, I'm going to make you tell me about when you think that case is going to wrap up. So if you're a contingency firm, I'm going to prioritize work in progress right after we get a P&L and a balance sheet. And some flat fee firms, depending on the way their fee agreements are doing, we may do work in progress last. So it's not a one shoe fits all approach, right? I always say, save your cookie cutters for the fucking cookies, people. We're going to sit here and take it and look at everybody's individual situation. We figure out where you are, and just getting some of these law firms to hire a bookkeeper is a huge step in the right direction. I want them to feel comfortable, and we do that with very small wins. And again, sometimes we get to the end of a year of working together and we look back and realize how much we've gotten accomplished with people, and they are shocked because we did it gently. So they really did not realize how much we were getting done. Also, when you're working with one of our controllers and one of our CFOs, they're never going to give you a pile of homework. We may need some data, but if we're going to build something together or analyze something going on with your labor, we're just going to open the Excel model on the Zoom call with them and do it with them, not do it to them, right? And I think the most successful people who work with how to manage in controllership and or CFO understand that we've got to kind of reach across the great divide and kind of fill that gap. It's a little bit more consultancy than maybe being the fractional CEO or maybe a COO, because we do reach across the gap. And the minute you give one of these lawyers a homework assignment of, well, build me an Excel spreadsheet that's going to show me what's going on with your associate ROI on their labor and their productivity. Well, guess what? That female or male lawyer will be running in the opposite direction so fast, they're going to leave fucking skid marks leaving your driveway. Okay. So you've got to meet people where they are and you've got to break it down. Right. I do a lot of the interviewing for people who will work here as CFOs and controllers. The minute I feel like they're going to be people who are trying to talk over somebody's head because it makes them feel better, makes them feel smarter. Yeah, that shit ain't going to fly here. Not for a second.
I'm very interested because, I mean, again, How to Manage a Small Law Firm has had a waiting list for something like 3 years now. I'll put the link below in case anybody wants to check them out. You can do a free diagnostic call just to kind of see where your law firm is at. And if you'd even be interested in being on the waiting list, there's a lot of cool resources and stuff. But you had mentioned, Evelyn, that you really can't map your way to success if you aren't looking at your map. And if somebody is giving you a map that's not accurate. And so, maybe that's something I want to just mention here for the listeners at home, that if you are still feeling stuck in your law firm, if you feel like you're, chained to your desk sometimes, if you don't feel like you can have a life, you're not making the profits that you feel like you should be making, that you're doing good work, but the clients aren't finding you. So many of these issues can be diagnosed or improved or eradicated by having good data. Evelyn, would you say that that's a true and accurate statement?
Absolutely. And look, you could be an amazing lawyer and no one ever taught you how to run a business. No one ever showed you how to read a balance sheet or understand how to calculate what distributions you can take out of your law firm. So no one should beat themselves up for not knowing what they didn't know when they started their own small law firm. I think it's super important that just the awareness that there is some sort of a gap that you need to fill, just the awareness is a critical first step. So many people are unaware that there's a gap in what's going on with their business. If you just even have the awareness that you have something and you need to fill it in terms of better numbers, not only getting a financial statement once a year when we do our tax return. The awareness that there is a gap that you need to fill is the very first step. And so just having the awareness, you should give yourself credit for that level of self-awareness.
Let me ask you then my favorite question that I love to ask every guest who comes on the show. Completely divorced, by the way, of anything that we've spoken about so far. So it does not have to be related to financials unless you really want it to. But you personally, Evelyn Aucoin, what is one of the most profitable pieces of advice that you have taken action on since becoming a team member for How to Manage a Small Law Firm?
One of the most profitable things I have done is I actually started doing a vision board every single year. I had done them years ago. They're a backbone of our business planning workshop that we do, which I'm trained to facilitate. And one of the things people do is a vision board. And so crazy enough, I had done them sometime in my past, but I hadn't done it. I always did annual goals. I've always been a goal setter, write down my goals in a notebook and this, and every quarter look back and see how I'm doing on my goals. But for some reason, I had stopped doing the vision board. And in my very first year here in 2018, my husband and I were considering a move to the mountains and had started trying to think about what a house we wanted in XYZ. And I did my vision board. That first quarter I was here at How to Manage, and I went online and I started looking at builders that were building in the community where we decided to live. And I saw a beautiful house. And I took the screenshot of that beautiful house and I put it on my vision board. In the back of my head, I thought, I probably can't afford that house, but I like the style. I like the color. I like its views, XYZ. I mean, that would be like close to my dream house. Fast forward 2 years later, we're actually starting the process. And I said, what the hell? I called the builder. He knew the exact house I was talking about. It's very prominent on his website. And it was a 5-bedroom house. I'm like, well, could we do a 3 or a 4-bedroom version of it? He goes, oh yeah, you can do anything you want. I'll be damned if we didn't pull those plans, adjusted it for our square footage, and I'm sitting in that house right now. So How to Manage pushed me to dream about what I really, really wanted. And I've been in the house now for 4.5 years. And I don't think I would have dared to dream if I hadn't done that vision board.
Oh, I am so glad I asked that question. And I kind of feel like this is a full circle moment too, because if I were to really distill everything that we talked about today, I think we ended where we started, right? You have to know what your personal definition of success is. What do you want for your life? Dream bigger. And I think that's the first thing I would tell our audience too, right? Dream bigger, but figure out what you want, not what you'll tolerate, not what you're willing to settle for, not right? What do you actually want? What is your definition of success? How much will you have to invest in your life to have the kind of life that you really want to be living?
What if I'd never called the builder because I was too scared of what they were going to tell me? What did I really have to lose? As one of my other friends told me one time when I was doing something in business development and I was scared because I was going into a very big presentation. She goes, the worst thing that can happen, Evelyn, is they'll say no, like you've never heard no before. I thought, well, damn, you're right. That is the worst thing that can happen, is that they're going to say no. I really shouldn't be that scared. If the worst thing that can happen is someone's going to say no, well, then what the fuck? Just do it.
Yeah, and I would say that. I would say, number one piece of advice that I have gotten from this interview is dream bigger, but pick a dream. Pick a goal. Pick your own personal definition. What would my life look like for real if I was successful? How would that affect me in terms of my time, in terms of my money, in terms of my reputation, from a financial, from a personal, and a professional standpoint? And then I think the next thing that you said that really kind of got to me, gosh, what was your exact quote? I was like, I need to put this on a pillow. It was something about like not accepting mediocrity. Oh, don't accept the default settings.
Yeah. Don't accept the default settings of your life, right? I think if you do want to live in the town you grew up in, if you do want to follow in your mother or father's footsteps in a similar profession, I'm not telling you not to, but make sure it is really what you want and you're not just, marching to the same drummer because it's the only drums you can hear.
Yeah, I love that. And as well as, dream bigger, figure out where you want to end up. What are your goals? And then I think the next thing really would be figure out where you are now. So now you have a goal. Now you have to figure out where you are. If you were on a map, you're the big red dot that says you are here. And you have to know where that is so you can chart a course to the destination you want to go to.
Absolutely. That is how you figure out what the gap is. And without the realistic picture about what the gap is, you can't begin to solve for X. You can't begin to solve the gap. So, and again, another thing we teach here a lot is, airplanes, right? When they fly, they set a destination. They are off course more than 90% of the time and spend most of the time flying, bringing themselves back on course. So it's always not going to be a laser straight line either. It's how you bring yourself back on course that matters.
I did not know that about airplanes, and that's fascinating. And I also really like that thought process. A lot of people think that success is a straight line. I want to do it, so therefore I'm going to do it, and any setback means I've failed. But it's not. It's just, here's my course, and I'm going to get back to center as much as I can. And then I would say the third thing really is invest in good financial data, whether that is demanding more from your current bookkeeper or hiring a bookkeeper in general, or maybe finding somebody new. But making sure that whatever data you have to go on is complete, that you are getting the kinds of financial reports that actually help you to make decisions. And if you need any help figuring that out, chapter 12 through 15 of Profit First for Lawyers is all about various financial reports that you can get started with. That's chapter 13, that you can dig into once you're comfortable with those first starter reports in chapter 13. That's chapter 14. And then in chapter 15, the numbers that when you really start getting serious about the financials of your business that you can look at. But that is going to give you the data, the maps, so that you can chart a course to live the life you want to be living.
Define it and then set your intention on how you're going to map where you are, from where you are to where you want to be.
And if you need any assistance, if any of that feels overwhelming, we have so many resources that are available on profitfirstforlawyers.com. There are a ton of QR codes in this book. If you don't have your copy yet, please do go and grab one.
Here at How to Manage, we're very clear about what profitable means. It means you're exchanging something you value less for something that you value more. That could be money, time, reputation. And that's why your definition of what successful matters so much. Because if you haven't made that definition, you don't know what you value more than what you're giving up.
So consider this our invitation to lead a more profitable life. Thank you so much for coming on today, Evelyn. I just adore getting to have these conversations with you. We will definitely bring you back for another time if you are amenable to such things.
Of course.
But sincerely, thank you for spending some time with us today. I got a ton out of this.
Thank you so much for having me. It was fun.
And folks, that's what we've got for you today. Now, I hope that this was as valuable for you as it was for me. Stay tuned next time for even more great insights that are going to help you to live the life that you've always wanted to be living. We'll see you there. Thank you for joining us on another episode of the Profit First for Lawyers podcast. If you're enjoying what you're hearing, tell a friend and buy your copy of the book at profitfirstforlawyers.com. Your future self will thank you for it, and we will see you next time.